Welcome to the Silent Trading channel. On Friday the 5th of June, today we'll be going through the gold chart to check and see if right now the trend is on a bearish side or a bullish side, and where can we possibly enter a position without experiencing drawdown or without experiencing the least drawdown possible. But before we start, please subscribe, like, comment and share if you like this video, and also to support me, my trading journal, right? So we will first start by going through the 4 hours chart, but before going through the 4 hours chart, we're going to be checking the daily chart first. As you can see that the daily chart right now has already pushed down to accumulate buy side volume from the daily support over here, right? This is a daily support that has been formed from yesterday's candle, because yesterday's candle pushed up to close as a bullish candle but wasn't able to push up and break resistance, correct? I'll delete this line over here first because it is a bit too messy, right? And I'll delete this big support. Okay, yesterday's bullish candle, even though it was able to close bullish, it wasn't able to break daily resistance and also wasn't able to break the 4,500 psychological resistance, indicating or signifying that the chart is still not ready to go bullish yet. Because why? Because people have been panic buying, or what you call a follow buying, right? By following the mass and kept buying. Once the mass kept buying, the retail traders kept buying, the chart then pulled back, leaving retail traders or leaving buyers trapped above, which is the same scenario as always. Retail traders are trapped above with their buy position, or either trapped below with the sell position, right? Or your short position. And then the chart pull back, not being able to close above resistance, not able to break resistance. Even the daily resistance wasn't broken. Even the 4 hour, no, even the 4,500 psychological resistance wasn't broken. It is telling us that it is not ready to go bullish yet. It is not ready to expand yet. And then what happened at the next candle? The next candle pushed up to form a top wick, or what you guys call a manipulation or retest, before pulling back and then dumping down, right? But it didn't actually dump down at the first instance, right? It slowly kept going on a sideways down, and then it just dumped at the release of the non-farm payrolls numbers, right? So it is already telling us that it is going to form lower low, lower high and lower low continuously until it is able to form a bullish price action, and a really strong bullish price action at that, right? Because the yesterday's candle, even though it was able to close bullish, but by pulling back so much, it is already telling us that buyers are being trapped above, and if buyers are trapped above, the chart is not going to go up for buyers to be able to close their position at break even, correct? They need buyers to go into liquidation before they can start going up again. So what happened next was a dump, right? Like I have always been telling you guys, that try to imagine, try to analyze where buyers are trapped, where sellers are trapped. That will be the best possible spot to not enter a trade, right? The best possible spot is to enter a trade is after buyers are trapped above and the chart dumps. That is a sweetest spot to be entering a trade, because a dump after trapping buyers above is telling us that it is forcing buyers to close their position. It is forcing buyers to go into liquidation, and if buyers are being forced to close or go into liquidation, that is the best possible spot to be entering a trade right then, right? And also the same thing for sellers. If you're going to be selling, you need to wait for sellers to be trapped below, and when the price spike up, you will then enter a short position or a sell position, because a position that is entered from the spot, right, from a spike or a dump after buyers are trapped or sellers are trapped, is the sweetest spot to be entering a trade. Okay, so right now this dump is to take out buyers from above at this high wick over here, and at where? and at every single support that the chart goes down to attack, right? Every single support that the chart goes down to trigger is being used to accumulate buy side volume, correct? And as I've been telling you guys before, or yesterday that I've told you guys, the chart is trying to form lower high and lower low, which means by looking at all of this price action, it is still able to push down further and further until people stop buying and then start selling continuously. Only then will the chart form a bullish price action and then start expanding above once again, right? So right now I'm not going to be entering any buy side position, but I have bought once at this week over here. I've bought once at this week over here. I bought once at this week over here. Because why? Because this is a week, right? It can be this week, it can be this week before the next support, because this support is a 4,400 psychological support. By buying before the next support, you are anticipating for the price to pull back for you to take profit, or you are anticipating for the price to close bearish and then open a new candle and then form a bullish candle and close a bullish candle and then form a bullish price action. And if a bullish price action can be formed and also be complete, that will be the best bullish price action that you will get your position at, correct? So right now if it pulls back, I'm going to be closing my position, because a pullback is telling us that it is going to drop down further. But if it is able to close at around this spot over here and then start forming a bullish candle and a bullish price action, I will then try to hold my position and wait for the price to form a new high. If it is able to form a new high and also able to attack this resistance over here, I'll be holding on to my position. But if it is going to form a new high but not able to attack this resistance over here, I'm going to be closing off my position and taking my profit. This is my way of trading, looking at the movement, looking at the chart, looking at every single detail the chart is telling us, and then understanding what the chart is trying to do. If it is not accumulating sell side volume, my buy position wouldn't be safe for long, right? If it push up but not accumulating sell side position, sell side volume, my buy position wouldn't be safe for long. But if it push up and start accumulating sell side volume, that is the sweet spot that I'm waiting for it to attack, because it is telling us that my buy or my long position is going to be safe soon, because triggering sell limits, accumulating sell side volume is telling buyers that your position is safe, right? So every single thing that I'm doing here, I'm not doing it out of impulse. I'm not doing it by following other strategy. I'm trading based on my understanding of the chart, based on my understanding of human psychology, mass psychology, right? And based on my understanding of price action and real price action, not a price action that you call, not a hammer, not a shooting star, not doji. Nope. My price action is looking at the chart and being able to tell what it is trying to tell me, being able to understand what the chart is trying to tell me, right? That is real price action. Not price action based on shooting star, not based on hammer, right? Nope, that is not price action. Price action is understanding what the price, what the candlesticks are doing. That is price action. That is analyzing based on understanding, not analyzing based on what you memorize from others trading cheat sheet, right? Because cheat sheets are not mainly used for trading by professional, because professional understand the chart. They do not need to memorize price action, candle pattern, right? They do not need to memorize all of this, because they understand the chart. They know what it is doing. They know how the movement is telling us where the price is going to. Okay, so right now, as I'm telling you guys, I'm not going to be buying because I've bought once and I'm waiting for the chart to either pull back and I'll take my profit, or close bearish and then open a new bullish candle and form a bullish price action. And if it is able to push up and attack resistance, I'll be holding on to a long time my position. But if it is pushing up while not attacking resistance, I'm going to be closing it, because I do not know when my buy position is going to get my stop loss sweep, or either that the price is coming back to my position. Okay, so that is all I'm going to be here for you guys, and I hope you guys can be profitable. I hope you guys can stay safe in trading. Do not risk more than necessary. Risk what is needed to be risked, not more than that, not less than that, right? Risking too much will destroy your mindset, will destroy your logic. Risking too little will slowly make you greedy over time, because risking too little, when you see little profit, you'll start to be greedy. You'll start to blame yourself for not adding on to your lots, or for not adding on to your position, and then you'll start over trading next, right? So risking what is needed to be risked, not too much, not too little. Just the right amount of risk will make your portfolio grow continuously, not exponentially but continuously, right? In a linear way of growing. Okay, so for today, that is all I'm going to be here for, and I'll look forward to seeing you guys tomorrow. And tomorrow we will come and see if the price action on the weekly side or the daily side is going to be closed bullish or bearish, and then we'll decide how we will trade next week. Okay, so for today, see ya.